Alright. Let's fucking do this. Alright. Good morning, good afternoon, good evening, whatever the fucking time it is. This is Calculated Opinion. I just wanted to kick everything off by making this inaugural episode, I guess you could say. It's currently 6:30 in the morning, waiting for market open, and I just thought I'd gather all my notes on what I did my research on, and that's two particular companies that I either love or I'm a little bit worried about. And those companies are American Airlines and Blue Apron. Alright, and we're going to go in deep on both of them and kind of just divvy up what I think about them. Before I kick off anything, I do want to state I'm not a financial advisor yet. I'm working on that. Alright, give me about a year or two and I'll get back to you on that. But, we're going to get right into it. As you know, this is a calculated opinion. So we did the numbers, right? Did the calculations. So I'm trying to be as fundamental and as technical as possible with what I say and what I do. And like I said earlier, this is only my opinion, but I think my opinion has some weight, just like every other Wall Street bets doodad or every CNBC sock puppet that they got up there. So yeah. Oh, and by the way, all right, I'm still diamond handing. All right. I didn't get in on GameStop, alright? It's a little bit too expensive for me now. It'll take up way too much of my portfolio. But instead, I got in on AMC, right? And I'm kind of worried about them because I'm looking at the charts right now and they're already down 0.5% in pre-market, so I'm kind of worried. But I think that's just the risk, That's the risk of being diamond hands, right? If you're diamond handed like me, drop a like, drop a subscribe, and a diamond hand in the comments, Actually, I've been thinking about starting the term tungsten hands, right? Because technically, tungsten is more dense than diamond, or like the carbon atoms that fill a diamond, right? And technically, it has higher heat tolerance than diamond. I don't know if that's actually factual. I should check that, but I don't care. I feel like starting tungsten hands, right? Because tungsten is just cooler. Whatever. Let's fucking get into it, Alright, so American Airlines, right? Ticker AAL. Kicked off, let's say about Tuesday of last week, right? When I'm writing this video. Mainly due to a fantastic Q4 earnings that blew everyone's mind. No one was really expecting it, but it surprised everyone. Until Robinhood decided to be a fucking dick about it. Take a sip. Decided to be a dick about it and completely cut off trading for AAL, American Airlines, AMC, GameStop, the whole shebang, right? That whole fiasco. And then that's kind of what sent us on the downturn this week. But the difference between American Airlines and GameStop and AMC, I don't know about AMC. But the difference between American Airlines and GameStop, I'm pretty sure American Airlines is still going to be here about 2 to 3 years from now compared to GameStop. All right, I like GameStop. I got some childhood memories from there. But it's like a dinosaur, But you don't want to see it die, so you're trying to put it on life support by buying consoles from it or buying a Funko Pop or whatever. American Airlines, that's completely different. You're going on a flight from fucking Seattle to New York, or wherever the fuck you want to go. You maybe want to go to Disney World. You maybe want to go see fucking Mulan, but in real life at an opera house or something. I don't know. You take your pick. But it's every airline has been fucking hammered by the pandemic, which is upsetting, but it's also everyone could see it coming. The second that they put down the lockdowns, you knew what was going to happen. You knew that these stocks were going to get fucking hammered, and hammered they did. They got hit hard. But I think this is the moment, beginning of 2021. February 2021 is really where I think we're hitting the inflection point. I think it's where we're going to start seeing a better vaccine rollout because of new presidency, not taking any sides, but with proper planning, with them already hitting 1 million doses a day, and hopefully keeping that average up, I think we're going to see a better Q2 2021 and Q3 compared to last year by far. But I'm just gonna run through the numbers. Since pandemic lows, they're currently up about 120% on the stock, which is fantastic. And about EPS, they're kind of down about negative $3.81 for the quarter, and about negative $18.36 for the year, which is a bit yikes, if I might say. But what do you expect with basically revenue down to a quarter of what it was previously? It ended the quarter with about $14.3 billion in liquidity, and American expects to add another $700 million by the end of Q1 2021. Now, here's why I think this is fucking fantastic, right? It means that they're less likely to go insolvent, even with the kind of razor thin current ratio. So it's more along the lines of, okay, how much money can we keep from burning, right? And they did fantastic in that aspect. They took their cash burn from $100 million to $30 million from April 2020 to the end of Q4 2020, which is awesome. You take $100 million down to $30 million. That's a drop from 70%. That's fantastic. I love that. It means you're burning less. It means you're burning less cash just to keep the company afloat with these record lows, I guess, for passenger exports. But if you look at the oh my god. But if you look at the TSA website, you're starting to see a little uptrend. I'll put the chart up on the screen, but you're starting to see a little uptrend in passenger flows and people getting checked for flights. And you're starting to see a particular uptrend. This is good for every airline, especially American Airlines in particular, because they need the help. And why am I choosing American Airlines over everybody else? Well, what's been the subject for the past, 3 weeks or so, 4 weeks or so? Short interest. Now, though they aren't shorted about as much as GameStop, maybe, whatever, 47.76% shorted. It's a little bit on the pull side. I'll give it that, but still, that's still pretty high compared to larger companies, which I'll get back to that in a moment. So I'm just gonna keep going through the chart, and we'll talk about this in a moment. In expected Q1 capacity, they're expecting that to be down another 40%, and revenue to be down 60 to 65%. Okay, no big deal. I'm still expecting a kind of weak January, February, March 2021. Not faulting them for that. You can't really control people going in and out of flights with a fucking pandemic. Cause look at me. I've been invited to go visit my family down in Florida many times, but I don't want it because I don't want to fucking risk either getting COVID on a flight, even though they have the ventilation, all that. I don't care. Okay, I want as little chance of getting COVID as possible, mainly because I have immune compromised family members down in Florida, and I'm just I don't want to risk that. I don't want to be the one attributing to their death. Whatever. But it's also along the lines of, okay, how can I bring more customers in? And they enacted pre-flight COVID tests. I love that. Okay, cool. They didn't say what test they're doing, whether it was the 15-minute test before a flight or somewhere in the hour range. They didn't say that, which I would have rather they specified what type of test. They could have a variety and just didn't specify because there's too much of a variety. Whatever, I don't care. But they're doing a lot to encourage more customers for 2021, which I think is going to be a major deal. It's not really the fact that, hey, their branding is down. No, their branding's fine. The entire industry, the entire airline industry as a whole is harmed due to the pandemic, which is a problem. But they've enacted a cleaning. They enhanced cleaning and received the STAR accreditation, which I'm guessing is a major deal in the airline industry. Awesome, good, awesome. I'm glad you got that. And they eliminated a lot of fees to put onto customers, which is another. Oh my god, I'm losing breath. Which is another fantastic thing to bring even more customers on board. It's okay, I don't have to. Okay, yeah, I still got to pay the ticket, but I don't have to pay the extra fee for extra luggage or extra baggage or whatever, or even changing my flights. They don't gotta pay that fee anymore, which is okay, whatever. Not a big deal. I don't think it cuts into margin that much. But they brought in a lot of new stuff. For instance, they launched cargo flights, which have not been a thing since 1984, which I think is going to add to their bottom line a lot more. So, I mean, they could partner up with UPS or USPS or FedEx and to take off that burden of, hey, we know there's a giant influx of flight cargo. We want to help you out. Let us take some of the money as well. We got to make it good for everybody. Cool, whatever. I don't care. All right. But this is going to be paired with the growth of Amazon and Shopify and every online retailer in the market. Because unlike the growth of Amazon and Shopify and everybody I just mentioned, UPS and FedEx cannot keep up. Which is ironic, because you got these massive corporations and there's like, dude, we can't keep up with this massive amount of demand for 1 day, 2 day, next day shipping and all that. We can't keep up, which is fascinating that we've gotten to the point where we can order a product as easy as pie, but the company that delivers it to us can barely keep up because of the amount of demand. Which I'm thinking is like, holy crud. The world we are in right now is fascinating. But continuing with the points, they announced that they're going to get to net zero carbon emissions by 2050. And I think this is a major benefit and problem at the same time. It's a problem because there isn't really proper plane. I mean, like large scale plane that can achieve net zero at the moment. Though this is spec'd for 2050, so it's about like 29, 30 years from now, whatever, I don't care. I think this is a major issue in terms of, okay, well, what if there isn't a proper plane or there isn't a sustainable plane out by 2035, What happens then? Because if I'm not seeing something remarkable by that time period, which I'm not saying there isn't going to be. I'm just saying that, hey, it's kind of worrying to the sense that is our technology going to be up to snuff by that point? It could be, it could not be. I'd love to be wrong. This is one of the points where I'd love to be wrong. I'd love for our country to be net zero carbon emissions by 2050. I'd love that. That'd be fucking fantastic. But it's more along the lines of, where's our technology going to be? Are we going to be set back due to a catastrophe? Something's going to come up. Something always comes up. It's not always sunshine and rainbows. All right, which whatever. On the positive side, it means it's going to push that said technology toward development. I'm hoping that they're going to invest in companies that are focusing on electric planes or delivery vehicles as well. I'd love to see that. I haven't really seen any major players come out that are like, hey, we're developing an electric high capacity plane or electric passenger plane. I haven't seen anything like that, which is okay. What are we gonna do? And it's also on the point of, okay, how expensive are these things gonna be by 2050? And then there's also the whole SpaceX, like, oh, we can cut down travel costs in half by 2035 or 2030 by just launching their spaceship up in the air and then landing it on the other side of the globe, basically cutting in half travel time. Which those tickets are going to be fucking expensive, but it's just like, holy shit. The point we're getting to where it's like, hey, we could be looking at a potential net zero carbon by around 2050, 2040 area, or we could be increasing our travel capacity or decreasing our travel speed by that time as well. I know I'm rambling on about this, but still, it's like, okay, what are y'all doing to help push this? Which I didn't see anything in their Q4 reports, which is kind of rare. I've already talked about them being on a very lean cash diet, as I called it, from the cash burn of $100 million to $30 million perfect. I'm happy about that. Price to sales though, they're sitting at about 0.63, which is it's not the greatest. But it's not terrible, because you're looking at, okay, yes, we didn't have that high yes, we didn't have as high of revenue as we normally do. We are at a point where our stock is at a bargain, which is fantastic. Okay, with my expectations of Q3 and Q4 especially being much higher than they were in 2020, this is going to rocket back up. To where I could see price to sales potentially being in the, I'd say 4 to 5 range. But that's just speculation. Current ratio, though, it's sitting at about 0.67. It's really concerning in the short term, but I would say it's not that big of a deal, since they were backed by about $15 billion in liquidity. And I'm pretty sure they'll be adding more throughout the year with selling more shares. And we'll talk about that. That is, the whole selling more shares is quite interesting, I might say. And retained earnings, however, are down over 300%. Like I said, this is attributed to mainly reduced passengers, which is okay. You can fix that, but it's concerning. I don't want this. I don't want American to be insolvent, mainly because I have a position in them, but that's neither here nor there. But I do see them still as a bargain at their current price range of about $15. I wouldn't, if you can get them under 10, fucking take it. Okay. Recently they've been expanding their flight line with the Boeing 737 MAX. They received 5 in 2020. And they will receive 6 in about 2021, and receive another 10 of them in 2022. With the 787 from Boeing, they'll receive about 19 in 2021. And then they got the Airbus A320neo. I've never heard of that one. They've only received like one of those from year to date. And they expect to receive another 15 by the end of the year. And in 2022, they expect to receive about 26 of those planes, which is good. They're expanding their flight line due to, it's like, okay, we're going to receive a larger amount of passengers in 2022, especially. I believe 2022 is when we'll be for sure back to some form of normalcy, to where we can go out, we can go to theme parks, we can go to movie theaters, yada, yada, yada. Okay, cool. They entered into a marketing campaign with JetBlue, and this is currently under review by the Department of Transportation. Okay, no big deal. I mean, I feel like this could go rather simply. I don't see any major issues. It really just garners new loyalty programs for new customers, and of course they'll be splitting costs and whatever. And I think the main reason that they're going through the Department of Transportation is mainly just antitrust violations. Make sure that's all up to snuff and whatever. And they received about $6 billion from the CARES Act. This is mainly to keep workers on payroll, not upset anyone. I'm glad. Good. If you can keep workers happy and keep their paychecks rolling through, even with their reduced flight numbers, I'm glad. Okay? I'd rather have the $6 billion from the federal government paid to them, instead of having to lay off those employees and have them on unemployment. I'd rather have them in a job than not. Okay, and that's personal preference, whatever. And like I said, we can go big numbers, I guess. Short interest of about 47.76%. A little bit on the lighter side for the whole short interest fiasco, whatever. Bulls are mainly taking control of that. Their valuation, however, is just below $11 billion. I think this is vastly under par for what they're actually worth. I feel like they're more around the $20 billion range, especially with their flight line and how many assets they control. And really, I'd set more of a price target for like a selling opportunity around $40. If you can pick this stuff up for under 10, even at 15, it's still a great price. I feel like this is gonna rocket back up back around the end of 2021, 2022 especially, is when we're gonna see major profits from this stock. And some may be particularly bearish on this, but let me make a couple more arguments, okay? And though they've been some missteps in the last administration, presidential, in handling the virus, I believe President Biden has made it very clear that ridding COVID is his biggest priority. That's what he's made an argument about through his entire election campaign, and it's what he talked about in his inaugural address. Cool, whatever. So who's going to benefit from it? Hotels, airlines, retailers, cruise lines, theme parks, everywhere that basically has a large gathering of people. With Biden's hope of vaccinating around 1 million people per day coming to fruition, I wouldn't doubt that airlines wouldn't get a kickback. Even American Airlines cash burn is getting reduced about 70% or so, and yet increasing its liquidity. The other 5% speaks to me that they know how to handle this virus, both in sanitary and a financial way. And they recently raised about $800 million. They recently raised about $880 million through the sale of new shares between October 2020 and January 2021. But they've canceled this contract with Goldman Sachs. Why? Maybe because between analyst estimates of their fourth quarter earnings sent the stock skyrocketing from $16 to $30 in the span of 2 hours. A gain of over 80%. But like with AMC and GameStop, trading this position became nearly impossible with companies like Robinhood and Webull barring people from purchasing and only letting them sell. So what happens? Well, demand begins to suffer, even with the demand being present in the first place. In turn, the stock begins to fall swiftly back to $15 for the rest of the week, which is ouch. But you want to know the dirtiest thing about all of this? Let's take a look at Goldman Sachs, right? You sell about $880 million worth of shares. But more in the light of what's been going on with hedge funds over the past couple weeks, looking through their 13F-HR document from November, I had a bit of hunch from reading a recent article telling the public that if this continues, it could mean the end of the financial system. So I go in there and see some obvious positions in both AMC, whatever, with the casual put orders of the like, until I find American Airlines Group. The balls, the gigantic humongous of these fuckers. How are you going to turn to American Airlines and help them raise some capital, right? And then turn around and short them $40 million after they received what seems like pennies of about $12 million in fees? To me, this just feels morally wrong on so many levels. This is the greatest example of it's nothing personal, it's just business. That phrase has been ringing through my head so much from writing this, but my biggest issue is why is a company of Goldman Sachs statute able to both sell and distribute American Airlines shares, but also short them around the same time frame? Legally, I don't know why there aren't any barriers to prevent something like this from happening, because for anyone who knows the basics of economics would know that an increase in supply would result in a decrease in demand. That's just basic economics right there. This raises the question of Goldman Sachs purchasing the new shares basically from themselves at a small discount and then shorting them to the known increase in outstanding shares. This is completely hypothetical, and Goldman could know something that I don't. You know, the all-knowing Goldman Bank, whatever. Which really brings me to my hypothesis. This stock will rise back to 30. I have no doubt. By the summer, for sure. Though the company isn't currently paying dividends because the CARES Act bars them from even proceeding to do that in the first place, I believe this is a bargain. Currently, the TSA states that traveler throughput is about half what it was right before the lockdowns began. Honestly, I believe this company has a rather decent hands in Doug Parker as CEO, but I think they need to focus on bringing customer demand back to its pre-pandemic level. I don't expect a company like this to have exceptional margins because a rather thin profitability is industry-wide, with fluctuations in fuel prices to determine what fees you could charge a potential customer without using without them using a competitor. It's more along the lines of who, I'm just gonna cut that last part out. So what do I think of American Airlines? It's a buy. Okay, I'm in it. I'm in it right now. I'll say it. I'll say it out loud. I'll fucking yell it if I have to, but I can't because neighbors. Whatever. I don't want to disturb them. But this is a fucking buy, especially at $15 a share. You're telling me not, as a fucking hedge fund, you're telling me not to go into this because you think this is going to go insolvent and fucking crash. It could. There's always that chance of any company. Fucking Amazon can snap, disappear instantly. I think it's more along the lines of government regulation, but still, there's always that hanging death nail of, oh crap, this company could disappear literally like that. No problem there. I think American Airlines is different. If they do start going through more financial trouble, I do believe that the government's gonna be like, hey, here's some money. We don't need you going out of business. Mainly because that'd be just more harmful to the airlines industry in the first place. Because if one of these companies goes out of business, I'm talking about the big companies like Delta, Southwest. You got American Airlines. You got United, JetBlue, to a certain extent. All those companies. If one of those 5 goes out of business, that means that the flight burden is going to go on to the other 4, which means that they're going to need to jack up prices because they can't handle the massive influx of new passengers, or they'd have to expand their flight. They'd have to expand their flight line, which means that, hey, we need more planes. And those don't just pop up out of thin air, especially with Boeing under their current stress. And we'll talk about them in a different video. But it's more along the lines of, hey, where and how can this company get more liquidity? I know the other four airlines, they're bleeding money too. Everyone's bleeding money in this industry. But the government, if it sees one of these companies potentially going insolvent, they're going to help them out. I have no doubt about it. I doubt this company will go insolvent at any issue. But there's always that risk. Especially if this pandemic goes on for at least another 1 to 2 years, especially with these new strains, which is an issue, but I don't think it's that big of an issue in terms of, hey, how can we prevent lockdowns? Especially with the new vaccines, I believe that lockdowns are less likely as months go on and as more vaccines get rolled out. So is this a buy? Yeah, I'm labeling this as a buy. I'm in it. It's got about 3 to 4% of my portfolio at the moment. I want to expand in terms of growing, but I do think this is a buy. So, but like I said, not your financial advisor. Do your own due diligence, as I did mine. This is simply a report, and I'm putting it in video form because I know there's those people that just don't want to read and would rather have it just spoken to them, and I'm just fulfilling that destiny. And before we go on to the next subject of Blue Apron, if I could ask you to maybe subscribe and like and maybe comment. Are you currently in American Airlines? Are you thinking about getting in American Airlines? Or even why do you dispute or even support my thesis on American Airlines? Blue Apron. Now this is a company I came in wanting to love. Okay, it was benefiting positive. It was making major gains from COVID-19. And by the way, the ticker is APRN if you want to look at it. And they're up 13% year over year at about $112 million in revenue. Fantastic, cool, good. And ironically, the company has had issues with this massive wave of customers due to the pandemic. Their supply line, they can't support it. They can't get the amount of food that the people want in fresh quantities out fast enough. So, what do they do to prevent it? Well, you got their little technology sector. which is costing them about $100 million a year. And yes, they have been reducing costs and stuff and such. But that's been their major cost driver. In fact, I'm about to pull out their financials real quick. Let's see. I believe that this company is good, but not in the sense of what it is right now. This company could be very, very profitable. I do believe that to a sense, especially with the growing market of home delivery foods, both with DoorDash, Uber Eats, all that fun stuff. But then there's also more do-it-yourself cooking, like Grubhub, HelloFresh, and Blue Apron for that instance. See, currently their net revenue. Their net revenue for the year, as I said, was $112 million, up from $99 million in 2019. Operating expenses, though, cost of goods sold, it grows, as it does. I didn't calculate the growing margin on that part. But technology sitting at about $100 million a year. And that's more of a fixed cost. It's down about $9 million year over year. And by the way, when I said $100 million, I was meaning $100 million for the quarter. So far over the year, they've made about $345 million in the 9 months, and we'll be waiting on Q4. I'll make an update when they release their Q4 earnings. They're up about actually no, they're down about 15 million, which is honestly surprising with the massive influx of customers. Which when you look at it, okay, with a company like this, you might not be able to support that much of a growth in customer orders, but the main problem is really getting higher profitability, and that is mainly attributed to their growing technology firm, which their technology is more in the sense of, hey, how can we organize our products and have the right amount ordered from our producers and sent to our customers and still kept in a fresh stance, which is a feat nonetheless, which I'll give them the credit to. Hey, you're delivering fresh foods at a decent pace within the expiration, to where people receive the food, they get their supply. It's like, hey, here's your recipes, yada yada yada, boom, cook it. Which I love that. Fantastic. I was actually first introduced to Blue Apron about a couple of years ago. I was watching Entertainment Weekly. No, not Entertainment Weekly. What am I talking about? I don't watch Entertainment Weekly. ETC News. With what are the two dudes' names? I fucking love these guys. They're on Machinima. ETC News. Actually, Machinima's down. You couldn't even pull them up. But they got a channel up now called ETC. I fucking love their stuff. And Blue Apron, they showed up on their channel. And of course, being the young teenager as I was like, oh, how much are they? $60 a month. I was like, oh, well, no, not 6, yeah, $60 a month. And for a kid, that's just like, holy shit. $60 for how many? 5 meals? Oh my god. You gotta be kidding me with this. Which, I mean, when you compare it to like the monthly budget of food, that's pennies. Like $60 for like 5 meals. That's like a week. 240. You could live on that, but it's pricey. So, whatever. And yeah, though the quarter was down about 14% quarter to quarter, and mainly due to seasonal changes, I'm not that big of a deal. Every company has their seasonal changes. It's just a part of the business cycle. But their best month, they had about 2 million orders during Q2, which was fantastic. And customer orders sit around 350 to about 400,000 year to year, which is fine. As long as they keep that number growing, if we could see about 500,000 next year or into 2021, I'd be really happy. And they're expecting about 15 to 19% growth year over year for Q4. This is mainly, like I said, attributed to everyone being at home. They need to order food. Well, I don't want to order Grubhub. I don't want to order DoorDash. I want something that I can cook myself. I don't want to go to the store because I either A, don't have time for that, or I just don't want to risk getting COVID. What's the next best thing? Oh, I can go on Blue Apron or HelloFresh and order food from there, and they send it to my house. Yeah, I'll have to wait a couple days, whatever. I don't care. But I think the big problem, and I'm pretty sure the reason the company keeps getting shorted, is it's bleeding money year over year. But I mean, this trend has begun to head in favor of the bulls. Compared to Q3 from both 2020 and 2019 EPS has been halved from negative 1.99 to 0.96 negative, of course, for Q4. And I wouldn't be surprised to see EPS at about 0.8. But I feel 2021 could be very, very bright in light of their recent hiring. But let's go to the big numbers real quick. Short interest of about 138%, which is a lot. Though this number may be updated, I haven't looked at the recent numbers of companies coming back and closing off their short interest. They have a valuation of only about 170 million, which is mighty low. Which is awe-inspiring. I have a price target of about $15 a share at the moment for 2021. But I don't know. It's worrying, and we'll talk about that right now. Actually, I think we need to start with Blue Apron's new CFO, Randy Greben, which has a rather rocky past. We can go over his history real quick. Prior to Blue Apron, Greben had previously been the CFO of both Anna Inc. and Quidzy, companies that have both failed, but both rather in niche or saturated subjects. Anna Inc. was purchased back in 2015 for about $2.2 billion by AstraZeneca, which went bankrupt during the early part of the pandemic in 2020. Though they did file Chapter 11, still they went bankrupt. Problem. Though Randy left and in December 2019, it does make it rather concerning that the company he was leading went tits up only a few months later. Oh, and remember Quidzy? Quidzy was rather shit. Quidzy was another shit stain on Randy. Why did I write Randy's? On Randy's white satin tunic that closed down in March of 2017 by Amazon. Mind you, Amazon tried making Quidzy profitable for almost 7 years and even brought on Mr. Greben to solve Quidzy's probability issue. That obviously didn't fucking work. And honestly, I'm afraid of Blue Apron's future. Even with its recent prospectus in hopes of having a profitable quarter, I'm afraid because in Blue Apron's competitors, there's a fair few options to pick from, ranging from HelloFresh, which has been trading at about $85, and Peach Dish, who has an IPO potentially coming out later this year. We'll talk about those two another time. The problem here is who can produce the best product at a reasonable price to grow their customer base on a quarter-by-quarter basis. Blue Apron competes in an aspect of providing fresh foods to its customers while also providing technology that helps their providers deliver items on a timely basis. But so do its competitors. They do the same exact thing. So now it's more along the lines of the survival of the fittest. I feel that with the right cash, you could easily acquire any of these companies just to add to your arsenal. I feel like Blue Apron could possibly add Peach Dish, or even HelloFresh, or the other way around even. HelloFresh could be like, yeah, I'm going to buy Blue Apron, or I'm going to buy Peach Dish. It could happen. Or heck, a fucking spat could happen, and they could buy every fucking meal delivery service on the planet. Yeah, that's fucking monopoly right there. But I have my point. But if competitors like HelloFresh and Peach Dish provide a more meaningful service, then that looks even better on paper and actually garner a profit. Then I'll have no choice but to look away from Blue Apron and until it actually makes it worth my while. I'm not saying that they're overpriced, but I wouldn't give them too much of your portfolio until at least Q2 of 2021, where we could see Blue Apron on the cusp of breaking even, or even the start of a growing market. But like I said, I'm labeling this as not a sell. I think this is more in the middle of keep your eye on it, see where it goes. Will it trend back down? Because it's been on negative income for the past year that it's been on the market. But will it be trending back down to where it's losing even more money year over year? Or will it break even? Like I said, I'd love to see this company break even. I'd love to see this company even surprise me and profit. But yeah, I think this is more of a watch it. Don't buy it, watch it. If you can hop in to where it's half the price of what it is now, which I believe it's around $15 a share, take it. You know, fuck it, take it. Yeah, like I said, $7-8 a share, take it. But yeah. But this is a calculated opinion. If you agree, disagree, please put that in the comments. I'd love to have your engagement. If you have a stock that I want to look into, or company, or a new IPO even that you'd like me to look into, I'll take your suggestions. If you want to, you can follow me on Twitter at calculated -the. I didn't get to write in my own Twitter handle, but whatever. It's the calculated opinion on Twitter. And you can suggest me stocks to look into there. I want to produce weekly videos on the subjects of my interested stocks, what I have on my radar, what I don't have on my radar, what I have in my portfolio, what situations are going down with the SEC, and even with the news in general. But I'd love to have you a part of this family. And let's just see where this thing goes, you know? This is the calculated opinion, and I'll see you in the next video. Peace.